Financial services company Robinhood Markets, Hood, which is headquartered in Menlo Park, California, is known for pioneering commission-free trades of stocks, exchange-traded funds, and cryptocurrencies via a mobile app. Hood's stock declined in its public market debut on July 29, closing more than 8% lower at $34.82 per share. Hood shares have slumped 41.8% in price over the past month and 22.8% over the past 5 days to close the last trading session at $21.55. Hood declined more than 10% in its last trading session and hit its 52-week low of $21.50. The stock is now trading well below its 50-day and 200-day moving averages. In November, the popular stock trading app disclosed that it had suffered a data breach involving approximately 7 million customers. The stock's price plunged following the news. For the third quarter, ended September 30th, Hood's total net revenue came in at $364.92 million, missing the consensus estimate of $437.55 million by 16.6%, as cryptocurrency trading diminished. The company cited seasonal challenges and lowered retail trading activity as factors that impacted its third quarter results and anticipated these headwinds to persist in the current quarter. Its average revenues per user, ARPU, decreased 36% year-over-year to $65, while crypto activity declined from record highs in the prior quarter in Hood's last reported quarter. The company also reported sequential declines in new funded accounts and net cumulative funded accounts in the third quarter of 2021. Hood expects to generate fourth quarter revenues no greater than $325 million and full year revenue of less than $1.8 billion. The meme stock phenomenon we witnessed earlier in the year was more applicable to Robinhood's recent customer growth and likely resulted in overestimation of the company's core fundamentals and growth trajectory, said Deutsche Bank analyst Brian Bettel. Here is what could shape Hood's performance in the near term. Stretched valuation. In terms of forward price/sales, Hood is currently trading at 10.25x, which is 205.6% higher than the 3.36x industry average. Also, its 2.52 forward price/book ratio is 107.9% higher than the 1.21 industry average. Lawsuits. The Shaw Law Firm, a national shareholder rights litigation firm, is investigating Hood on behalf of its investors, some of whom allege securities laws violations. The investigation concerns whether the company issued false or misleading statements and failed to disclose information pertinent to investors. Also, Bragger Eagle & Squire, P.C., a nationally recognized stockholder rights law firm, is investigating whether Hood has violated federal securities laws or engaged in other unlawful business practices. Several other law firms, including Scott plus Scott Attorneys at Law LLP, are investigating the company on similar grounds. These investigations could negatively impact Hood's share price. Weak bottom line. Hood's total net revenues increased 35% year-over-year to $364.92 million in its fiscal third quarter, ended September 30th. Its total operating expenses stood at $1.71 billion, up 509% from the same period last year. And its loss before income tax came in at $1.37 billion, indicating a 12,333.5% year-over-year increase. Its net loss grew 12,250.6% from its year-ago value to $1.32 billion. The company's net loss per share came in at $2.06, versus a 96-cent consensus estimate, which reflects a 114.6% earnings surprise. Ratings reflect this bleak prospects. Hood has an overall F rating, translating to strong sell in our rating system. The ratings are calculated considering 118 distinct factors, with each factor weighted to an optimal degree. The stock has a grade of D for value, consistent with its lofty valuation. Hood has an F grade for sentiment. This is justified because analysts expect Hood's EPS to remain negative until the next year. Of the 169 stocks in the F-rated software application industry, Hood is ranked number 167. Bottom line. Online trading platform Hood has gained significant popularity during the pandemic period. However, in its most recent quarter, the company reported lower retail trading activity, which is expected to persist in the coming months. Last month, Hood also disclosed a massive data breach, which caused its share price to plummet. So, given the company's lofty valuation and bleak analysts' expectations, we think the stock is best avoided now.